Pielo.
The next major onboarding of value will be real-world assets.
Gary Vee also says everyone loves decentralization until you get hacked, right?
People need to have an undo button, and the blockchain is not friendly for that.
NFTropico.
On today's episode, we have Leonard. Doug comes from Hifi Finance. Doug is a very smart man and has a pretty interesting perspective on all things crypto and DeFi. We discuss with Doug the future of NFTs and DeFi. We go over how mature financial products are usually more stable and predictable, and that's something that's maybe going to happen with NFTs and all things crypto, and something that I'm really fond of, and this idea that blockchain will enable the biggest financial capital in the coming years, not because of the decentralization, but because of the transparent rails on which it's built. I hope you enjoy listening to this conversation as much as I did having it. So, Doug, Leonard from Hifi, welcome, and it's a pleasure to have you on NFTropico.
Thank you. Pleasure to be here.
Today's subject will be on the very interesting relationship between NFTs and DeFi, and I'm looking forward to hearing your takes on it all. Why don't we begin on maybe understanding NFTs as a financial product, because all of us Web3 degens have a very different background than maybe all you finance people, and then you can shed some light on the subject.
Sure. I think traditionally NFTs have been a lot more closely related to collectibles. A lot of people use analogies like trading cards, other maybe more like a rare watch, these types of things. Our generation grew up with Pokemon cards and these types of collectibles, and I think NFTs enter crypto and do a couple of things. It adds a visual element that I think is a lot easier for people to understand, and as audiences have grown, as crypto has become part of a cultural movement kind of worldwide, there becomes some cultural relevance to holding on to an NFT that maybe signifies that you were a part of a early adopting group, or you were at a certain moment of time, or supporting a certain movement within the ecosystem. And so sort of like if you had Woodstock tickets, today it's a collectible to say, I was there, I was a part of this moment of time, these are my values, and it's a way to signal, in our digital culture, things that represent us. So, I think that's, for the most part, that's what people are leveraging this particular asset type for.
Yeah, that's really interesting. There's some things there that I really resonate with, and I think that resonate across the ethos of NFT culture, and that's value, both of us economic and as cultural, and identity, which I think it's a fascinating subject, and how NFTs have become this source of identity badges, much like watches, as you were saying before. No one uses a Rolex watch for their precision of showing time, right? Everyone has a Rolex because it's a Rolex. So that's a very interesting idea.
I was just going to reemphasize, these end up becoming status symbols as the value grows. Bored Ape Yacht Club, I think, is the best example of sort of, you could have bought it for, $100, and, these things ran up to over $300,000 in value at one point in time. And so as the value and popularity grows of these things, and I think, a lot of people like to speculate on that, just like you might speculate on fine art, or a pair of sneakers that people might want them in the future, and potentially you can flip it for profit. But certainly I don't think sneaker makers are producing their shoes with the intention that people are going to be making money. They're not kind of classified as financial products, and that's kind of how I categorize NFTs as well.
That's really interesting. And from your perspective, like from let's, and I'm gonna use a very broad generalization, like from the DeFi perspective, like what do NFTs mean? Like what's what's the general vision of NFTs from that perspective?
Sure. Well, you can't ignore NFTs in terms of crypto is a reasonable market segment where there is value. People are trading huge sums of money around collecting these different collections and chasing flipping these NFTs, and so there's an opportunity whenever there is a sufficient amount of market liquidity. There's an opportunity to help mature that market and offer tools to help people create more predictability with their outcomes. And so, in terms of DeFi, the opportunity here is, as you introduce ways to add durable liquidity to NFT collections, it creates more predictability for users who want to enter and exit. It also creates new income streams for those who want to provide liquidity on an automated market maker like Uniswap, and opens up new trading strategies that people might want to pursue. And so this, helps you take an NFT and put it to work for you, allows more predictability, which generally people like with financial products, is they want to have some degree of assurances of certain outcomes. And so, given traditionally the volatile nature of all things blockchain, we kind of feel numb to a lot of those price swings, but it is something that is important as we bring in more and more people that not everyone has that type of stomach for it, like, early adopters do.
When doing the research for this episode, I came across a statement of sorts that I found super interesting, and it was like NFTs are commonly conceived as store of value, whereas DeFi is commonly conceived as like an unlocking of value. And like when I read this, like it like so much made sense to me. Like on the, again, like I mentioned, the like the symbiotic nature relationship between NFTs and DeFi, and I think that's something super interesting. And I definitely, like, I really wanted to have your take on it, your perspective, and maybe we can later go on to what Hifi has done on that arena. That's super interesting.
Sure. So take, for example, the our world culturally is becoming more and more digital. The way we interact with other people, especially with like the advent of COVID, our interactions became a lot more digital, and our persona of where we lived mattered a lot less. And so people started turning to NFTs as representing their identity on social media, and they get so wrapped up in their identity that there's no amount of money that you could really pay them in order to sell or get rid of that NFT, because they've wrapped up so much meaning in their life into this picture of a monkey or what have you. And so they're so invested, yet as that asset's appreciated in value, there's no way to tap into it. So, at Hifi, what we've, are working on and are really experimenting with right now is how can we allow, these, creators or people who just don't want to sell their NFTs to tap into liquidity, use it for, life expenses, making another trade, flipping, whatever you want, but put that idle value to use and get greater capital efficiency out of their portfolio. And so, without having to sell, you can leverage it as collateral. And so that's a big area of focus for us at Hifi, as we have this dual mandate of focusing on NFT communities as one of our customers, and then another large area we're focused on is real world assets and onboarding those assets to the blockchain. So those are our dual mandate of where we focus our attention on, is serving those two customers.
Doug, and is this kind of like lending? Like the way you unlock capital for these NFTs is through lending?
Yeah, that's exactly right. So your NFT can be deposited into our protocol as collateral, and then you can borrow against it. And what's special about us is we have a fixed interest rate model, and so whatever interest rate you borrow at is exactly what you're going to pay. It's not going to change based on broader market movements, and so it gives people greater predictability. So that's Hifi unlocks liquidity through lending for NFTs and real world assets.
That's something that I found super interesting. It's what's traditionally called, and traditional in big commas, NFTfi. It's like financial services around NFTs. That's very cool. And how has the market reacted to this? What's your view on this evolving landscape?
So we can see in the broader market, there is certainly traction, largely from other players that are further ahead in their development than us. And so we use that as kind of like our, it helps guide us that we know that we're headed in the right direction. There's some product market fit that's being found. And then making sure that we do each, step right, because a lot can go wrong with smart contracts. And so we tend to take our time and be extra careful. And that has trade-offs. We don't move quite as quickly as others in this fast-paced environment. But I think it's disingenuous to, whenever there is such a financial impact on these products, to not take care as best you can before shipping a product and pushing it live on the blockchain.
Correct me if I'm wrong, but I'm going to try to do a very, very, very broad and generalization of the NFT lending space. So when NFTs first came, there was this VenDAO, and VenDAO was super friendly for the borrowers, or for the people who actually held the NFTs. Then came NFTfi and Blur, and things went bananas because conditions were super unpredictable, as you say, and now we're gearing towards a more established ecosystem where we know there's something of interest here, but we're trying to fine tune it to when it fits both the borrower and the borrowee. Does that make sense?
Yeah, I think that's a really good high level. I think the interesting aspect of NFTfi is, NFTs themselves are rather illiquid. And I think Blur has done a lot to add liquidity to the market. And I think that, the combination of their incentive structure with their lending product allows them to do what they are doing at a pretty large scale. But at the end of the day, your ability to be an effective lender comes down to your ability to liquidate collateral. And so, these bigger players have an advantage because they're able to absorb losses, whenever, they get it wrong or the market gets it wrong. And, somebody's taking a hit anytime the market shifts one way or the other, because they're either long or short these assets. And, but that eventually does add more stability and more of a maturing market with these more sophisticated products, rather than just being able to trade it, being able to borrow against it, or being able to lend it out. And short certain collection is valuable for users who are more sophisticated.
That's pretty cool. Yeah, that makes sense. And the way I think about this is it seems unavoidable for me. Eventually we'll get to the point where we'll be lending against real world assets, right? Today we're lending, it's an open market for people to lend against monkey JPEGs or Fidenzas or whatnot. But tomorrow it will be people will actually get credit, or will be able to access liquidity and capital for things they own today that are not liquid, right? Like mortgages, or I don't know, your collections, and there's so many things that will be that's something that sounds super interesting, and I'm super glad to actually talk with the people making that possible. That's amazing.
Yeah, I mean that's our thesis here at Hifi really is that the next major onboarding of value will be real world assets. And it makes sense when you really think about it, is we have these existing, public and private debt markets, as well as equity markets. And, hopefully eventually even things that weren't traditionally liquid will be able to tokenize them. And because blockchain brings two major innovations. One is transparency around terms, like the type of agreement you're entering into, and which helps standardize things, helps makes gives players an even playing field. And then the second thing that it does is it gives access to a worldwide market where you just need an internet connection and a common language, and you can use these products with anybody around the world. Whereas traditional financial markets are pretty locked down, geopolitically, and we'll still see some of that flow over. But I think starting from such an open foundation gives an advantage as we rebuild the world's financial rails with consideration for an open platform and an open settlement layer like blockchain offers. And maybe it'll be Ethereum, maybe it'll be something else. um, it I can tell you that a lot will change between now and then, where we're looking at more than 50% of the assets that are actively managed in the world are on blockchain versus off. So we've got a long journey ahead of us.
Doug, talk to me a little bit about like how does this roadmap look like? And again, I know this is super high level, and no one's gonna hold you to what you say today. But like,
well, sometimes high level is easier to talk about, to be honest, because you know that there are very specific things that have to be accomplished. You don't have to be right around the timeframes, but here are the major challenges. The first major challenge is a robust legal framework that any buyer anywhere in the world can have a high degree of confidence in the enforceability of their ownership rights. So, buying an asset is does nothing for you if your ownership rights aren't going to be respected. In particular, in your ability to liquidate them and get the value out in a way that is meaningful to you in your life. And so, I think that the U.S. is well positioned to adopt, and sort of represent a lot of the assets through their court system that has been proven, over many decades. They've got courts in Delaware that are specific to, that are really designed to cater to corporations. And I think maybe we'll see some states try to define themselves as being the Delaware for blockchain-based assets and how they honor property rights. And so there's going to be experimentation, and we're going to need to see some court cases be defended. And that is what's going to give people confidence, is once they can point to some precedent in some court system. It doesn't have to be the US, but in some court system where they can be represented, not necessarily by their identity, but maybe even by just their wallet address. A new class in a class action lawsuit where just token holders are represented by their address rather than any other identifying features. So that all needs to be proven out.
Cool. So the first thing, and I plan to double click on this later, but okay, so it's a robust legal framework. That makes a lot of sense. What else do we need, like, in order to get this utopia on chain?
Well, I mean, it's going to come with trade-offs. I don't know that it would totally be utopia, but the next thing that you need is user experience to improve drastically. And I think we already have it. The groups that are involved don't want to acknowledge that it's there. So, for example, Coinbase is pretty easy to use, but it's centralized. And I think that we will, even in the US, you have custodians of your stocks, which everyone learned with GameStop. They got a big lesson in how settlement works and how you don't actually have kind of like physical or technical possession of the stocks with, when you're using Robinhood and these types of, centralized layers on top of the existing financial system. And so I think uh, we will need the Coinbases, the Robinhoods to come in and make the UX easy. And then what you're going to get is you just have more transparency around, like, when you place an order in the app, does it actually translate on the blockchain? Are they aggregating your orders, or are they, just being, making the UX better? People need to be able to reset their password. People need to, have an undo button. And the blockchain is not friendly for that. And so I think that there's an opportunity for kind of these layers in between the raw blockchain that just kind of offers some, different types of guarantees where they can let you reset your password, but they're trusted and they honor what requests you make for, your assets. But it's got to be easy, because people make mistakes, and they need, if we make it easy for them to make mistakes, they'll stay longer.
I agree with you on that. I think, like, I read somewhere, like, centralization versus decentralization, it's a spectrum, right? Like, you get to have everything on the spectrum, and you don't need everyone to be like self-custodial, hard reading 12 words somewhere in the woods, but you just need the grandma and uncles and everyone to be able to access these type of markets. And I agree. There's something Gary Vee also says, like, everyone loves decentralization until you get hacked, right? Then everyone's like, yeah, no, please take my seed phrase.
Yeah, and maybe there's insurance layers that kind of come up to help protect against that, but no insurance company is going to be able to survive poor security practices by its users, and so you'll be kind of locked into certain types of products, where the insurance company is either holding onto a backup of your seed phrase, or these types of things where they have to approve certain transactions, but some layer of double checking, which will make people move slower. Just like sending a wire today, I have to go into my bank physically. If it's above a certain threshold, because they want to see me check 2 forms of ID, these types of things. Ask me if I'm using that money to buy gift cards to send overseas or whatever. But you'd be surprised that there's a reason why they do these checks, and it's because their customers have lost a lot of money because they were getting scammed.
I agree. There's always 2 sides to that story, right? Yeah. And the other thing I wanted to double click on, Doug, is like when you first mentioned, like, this the need for infrastructure and, like, clear regulation, and you mentioned, like, someone being like the Delaware for blockchain or whatnot, but like, each passing day I think about, like, is the states going to play an actual role on this, like, and I wanted to gather your thoughts, like, recent, I don't know, governmental attitudes toward blockchain and crypto, and, like, and you get to see other nations, I don't know, the UK or Hong Kong, or like, it seems as though someone else might be, Japan maybe, like, able to rise up to that role and do that, or how do you envision this geopolitic infrastructure around regulation?
The way I reason around it is I look at what's going on, and here's kind of my rationale. I think that we have a lot of complexity, that you can't write laws for something you can't articulate. And I think what blockchain is so different from ecosystem to ecosystem, and what the products are also different. And so we need some common themes or common product categories to become clearly defined before they can be regulated. An example of one that we do have today is stablecoins. That's an area that I think we, for the most part, understand what it is conceptually. We have different types of stablecoins. The risky algo stablecoins that aren't so stable. We have collateral-backed stablecoins like DAI, and then we have centrally issued stablecoins like USDC and Tether. And so now that we have the ability to articulate these tools, we can now begin to write laws for them. A lot of other interesting ideas and experiments in blockchain, they're over before you could really get lawmakers up to speed on what it is in order to regulate. And so, as time goes on, we'll have clarity, and then we'll be able to offer that. I think in the U.S., a lot of the crypto side of things is just looking for kind of like broad permission to go and experiment. And it's just not coming because a lot of this stuff does look like securities and does kind of meet the definition of what a security is. And so I think they're wise in not giving that clarity and holding us in limbo until we have more clear things to specifically regulate, rather than just a blanket regulation of the whole thing is bad or the whole thing is good or these things are allowed, but we'll cut ourselves short because no other innovation can happen if we just start making blanket regulatory decisions before there's been any time to innovate. I mean, we've had time to innovate, but like for broad categories to surface. So, beyond that, when you look at the United States and its interest, throughout the history of the United States, there's one thing that they care about above all else, and that's the U.S. dollar and the U.S. dollar's supremacy. And so, certainly, in order for the United States to be relevant, if we assert that blockchain is the future of finance, the United States will have to participate in order to remain relevant. And, they already are, somewhat relevant because you just look at the dominance of Tether and USDC. There's no Euro coin or other token that is pegged to some sovereign currency that's even close to broadly being used. And honestly, I don't think users would prefer something else because with the United States, you get certain predictability, certain behaviors that, maybe you don't agree with how it goes about, maintaining its dollar supremacy within the world. You can at least count on the United States to behave pretty consistent with how it has in the past. And that makes a good form of money because predictability is the most important part of any store of value over time. Even though it is inflationary by nature, that inflation is somewhat predictable, and we try and move slowly, and we move publicly with, when rate hikes are happening. And so for all of its flaws, it's honestly the best system in the world. You take the competing systems, in Europe with the euro, you have so many voices and so many competing interests that it's hard for there to be a lot of predictability with that. Maybe a lot doesn't get done because they're not as unified because it's made up of so many nations. And then you go to Russia or China, and the thing with those two countries is they have very different fiscal policies, and the death of a leader there will substantially shake up that currency because it creates such unpredictability. Whereas, even the death of our president, not that I would wish that on any president with, regardless of political beliefs, it's not going to shake up the dollar. It's not like we have a very robust system of succession that is honored. Whereas, with Russia, that has not been honored. And then with China, you have just a totally different economy that is very much based on it being the producer of goods in the world, and they're keeping their currency cheap relative to the rest of the world, so that there is this type of arbitrage with trade in their country. And so if they try to become the reserve currency, it would be a disaster for their economy. So predictability is good. And so the U.S. wants to remain relevant, and I expect that they will continue to remain relevant. And so they will have a big role to play in DeFi going forward. Assert that we do get some regulation that pulls us out of the game, I still think that the dollar ends up being the dominant sovereign currency within DeFi, regardless.
Yeah, definitely. That's pretty smart. Definitely, I can see a scenario where even like if US bans all type of crypto, the crypto world will still trade against USDC or USDT. Right? That's super plausible. And that's also, I think, that like the theme of this episode, Doug, or at least like in my takeaways, like predictability usually means like financial matureness or something like it. When a financial product evolves or like for it to actually arrive for a certain market, it needs to be at some level of consistent of predictable of makes a lot of sense.
Yeah, it is a sign of maturity in the market that you have more and more predictability, regardless of volatility.
On that note, I think like a very natural follow-up question would be to ask you, and I planted to ask you about like what does BlackRock ETF mean, and like what are all these institutional filings for ETFs mean for the crypto space? Like, do they see some type of maturity and they say like, okay, it's time to move in?
I think when you're operating at the scale of BlackRock, which I'm completely underqualified to have much of a material understanding of, but I imagine at that scale, you are very interested in any asset type that has distinct financial properties, which Bitcoin definitely does. Um, it is a new type of currency that has a different set of rules, a different entire system, and being able to participate can be a hedge against other movements in the broader centralized financial world where it will behave differently because it is such a different asset class, and different can be good because you can decouple yourself from certain geopolitical tensions, and so there's utility in just that it's different, and that's not saying much, but that certainly is sufficient for what it is, and it's so basic that I think people can understand it. They know what to expect from it, and quite honestly, they want it to just stay the large, slow-moving, inefficient system that it is because it's known. And if you do too many upgrades to it, then there's going to be a lot of unknowns. And so I think they just see an opportunity for hedging against other economic conditions that might come their way, and that's good. Ultimately, they exist to drive value back to their shareholders, and this is kind of an unexplored new asset class that, it'll validate it in some sense, but it's not going to change what Bitcoin is. And I don't think Bitcoin is going to disappear either. So for them, I think it's a reasonable pursuit. Um, it'll add some legitimacy to Bitcoin, but I kind of I certainly hope that it will boost a lot of liquidity within the whole ecosystem. It's hard to say what exactly it will do, but it'll be positive for Bitcoin if they do get it.
That's a very comprehensive take on the matter. And I'm sorry to throw you under the bus. That's very NFT of my like this kind of finance. Yeah, and thank you for that. That's again pretty comprehensive and good to hear. The other thing that's very NFT of mine, and like my Web3 friends would not forgive me if I didn't, is like I'd like to have your take on the current state of the market, like in because we see NFTs bleeding all over the place, but we actually see like Bitcoin and Ethereum like on sort of a rally. So it'll be good to have your take on stuff.
So from a high level, I have to kind of position our own company and do forecasting, but a lot of the future, kind of in the next year or two, just depends on U.S. politics, which is kind of sad. But I think it all boils back to, we're kind of in a bear market, not the worst bear market we've ever seen, but still a bear market nonetheless. And people just get shaken out. Like people need to make rent. People give up they have a certain amount of tolerance for a certain amount of risk, and sometimes it extends beyond the timeline that they had allocated for this, and they need to go, pay for putting their kid through school, or pay for the car that just broke down. And so I think at this point, there's not like a super strong narrative as to like, why would I come and participate in this ecosystem that has so much uncertainty around it? And I think the answer to that question is because you believe that there will be certainty in the future, and thus you can buy these assets at depressed prices before legitimacy really comes. But it's a big risk because we don't have that certainty at this moment in time. When I look at kind of the future, it all comes down to who ends up in the presidency, because that impacts who's going to be running the SEC, which impacts whether or not these ETFs are going to get approved, whether or not we're going to be seen as favorable towards these innovations, or whether we're going to see more of this battle from Gary Gensler, who got embarrassed by his close associations with Sam Bankman-Fried at FTX and the whole implosion that happened there and the fraud that took place. So, for being the guy who is supposed to protect us from exactly these types of things, to kind of be buddy-buddy with the guy who was perpetuating, these types of frauds, it's just not a good look. And I think he's trying to backpedal his reputation, and he's in a tough spot. I think so. It's bullish if we get a change of guard. Regardless of the other trade-offs that will have on the broader world and economy. And then just, I hate to say it, but, the Fed in interest rates is the next thing that kind of impacts whether or not money starts flowing into the space. Broadly, I think we're tapped for liquidity. You look in the NFT space and you just saw that, the last time there was a huge pump in tokens, it was because Blur injected a whole bunch of capital from their airdrop. And so people went and spent it on NFTs. Whereas more recently, Azuki's, they did, this $40 million mint for this, this derivative collection. And that was very value extractive. They pulled $40 million out of it. And well, how did people pay for this new Azuki collection? Well, they sold their Bored Apes, they sold their Pudgy Penguins, they sold their, their doodles or whatever. And in order to pay for this, and then they were largely disappointed by it. But, good for Azuki's, they got $40 million. But, all of the top NFT collections have kind of been depressed because people were selling it for liquidity to chase the next shiny thing. Whenever you see this type of activity, I think it's just indicative that, the people that are here, they're still playing. And a lot of people have left. A lot of people have needed to make car payments or whatever. And a lot of people who thought they were going to make money aren't. And so they're trying to just, cut their losses and move on. And you've got no new players coming in to this, this market. And so without new players coming in, you're going to see broadly, the market move sideways or down or kind of bleed out. So that's what's kind of controlling this stuff. And we won't see new money flowing in without a change of guard in U.S. politics, sadly.
Okay, Doug, thank you for that. That's not something we're happy to hear, but that's something we need to hear.
Well, you can watch it because whichever way it plays out, it'll either be good or we can expect more, choppiness as we move sideways in the markets. And you can profit in both market conditions. And so being aware, I think, you can position yourself for success there.
Yeah, definitely. Like clarity is always better than uncertainty, as I think we've established during this episode. Doug, and thank you for this. It's been very, very enlightening. And I wanted to ask, like, what does, on a very high level, on a very maybe poetic take, like, what's the future both Doug Leonard and Hifi envisions for the financial world over the coming years?
So I think people underestimate the value of a transparent financial market where players all play with the same rules. That, I think, is going to be more valuable than the actual decentralized aspects of blockchain and how it will impact things. because largely, in the United States, there isn't an incredible amount of fraud in terms of like stealing from one account to the other, where like blockchain solves that because you have to have the private keys to sign the transactions. For the most part, we have protections, at least in the United States, maybe not everywhere in the world. And then, but I think that the innovation that's going to cause the biggest change is the fact that all of these large financial players are all of a sudden going to have to play on a public ledger, and they're not going to be able to play the manipulative games that they can get away with in the existing financial world, because there is a forever history of every transaction that they put onto the books. And so that's good. Transparency is going to radically change how you can play a game, and it's going to make it more fair. And I think there's going to be a different set of winners and losers. And that's a really positive, bright future worth looking forward to. And as silly as it seems, it starts with these marketplaces that are trading pictures of monkeys and tokens that, have dogs as their mascot. So, because that's what assets are. You get a rare car, it's a one of one that maps to an NFT really well and fits into that infrastructure. Or if you get Apple stock, it's just a token. And so I think that's the bright, positive future that we're all working towards, and how blockchain is going to impact our world.
Doug, that was beautiful. That's something I had never before articulated, nor have heard articulated that way before. So I'm definitely gonna end on that note. That's something I'm gonna sleep kindly today and many nights to come. And thank you for that.
You bet. It is a pleasure being here.
And okay, Doug. So thank you so much, and we'll definitely hope to have you back in NFTropico sometime soon.
Love it. We'll see you.
Bielo.